Insurance is a necessary part of any business. And today I have John Moller from Brown & Brown to talk to us about everything insurance for roofing contractors, homeowners, and associations alike. Stay tuned, we got a great one here. So I don't know if many of my viewers know this, but my background is actually with homeowner and condominium associations. For almost 5 years, I dealt with foreclosures, I dealt with collections, receivables, HOA meetings almost every single night of the week. They are their own animal. Roofing contractors have to deal with homeowners associations all the time if you want to land big commercial deals. But if you want to get those deals, you've got to understand homeowner associations. You've got to understand condo associations. And I've got a man here with me today, John Moller from Brown & Brown, who understands the things that HOAs and condominium associations go through on a monthly basis. And so today we're going to dive into some things with HOA and condos and give you a little bit of an education on the background and the decisions they have to make as boards. With that in mind, I'd like to introduce you to John Moller, everybody. How you doing, John?
Doing great over here. And you aren't lying. Condominiums and homeowners associations with their boards are their own animals. So you got to deal with the politics, the people, from each condo to condo. Some of them might be easy for you to collect your money. Some of them may be very difficult. Depends on, the personalities of each. Thanks for having me here. Just a little background on, who we are and what I do. I work for Brown & Brown Insurance. We're basically the largest provider of condominium insurance in the state, along with contractors and any other middle market. What I mean by middle market is we do insurance for the largest companies here in Florida that aren't necessarily international companies. So we're not, Coca-Cola's, Mercedes. We're here for the largest contractors, condominium associations, distributors, warehouses here in the area. So when it comes to thinking about insurance, like for that, what we actually do is what sets us apart from other insurance companies is we actually develop programs that even other agents use that come to us to purchase insurance. We find areas of insurance that's very difficult to get. In Florida, it's hurricanes. In California, it's earthquakes. So we actually put together companies called managing general agents that help develop these programs that we can, sell to business owners, condominiums here, for insurance that's very hard to get. So hurricanes is very our expertise. That's kind of what I've done for the past decade. And, that's really what I've been trying to hone in and try to help associations here in South Florida purchase, because it can be very difficult. You're looking at different things, these large deductibles. How do we pay for them? How are we going to pay for our roof when it goes off? A lot of these things is kind of what I've tried to build my expertise in.
So let me ask you kind of a stupid question. I want to take a step back. For a layman or somebody's out there that's watching that's on an HOA board, can you walk us through the process of how they get one of those customized plans from Brown & Brown? Where does it start? Does it start with a phone call to you? Do they notice damage usually? And then they're calling, wanting to know, hey, how do I get this stuff covered? Can you just walk us through that process, John?
Of course. So when it comes to insurance is you always want to be ready before your event happens. You don't want to have your roof get blown off and then try to procure insurance because you won't be able to get it. So what you want to do is you want to make sure that you find an agent that you trust. An agent, like the way that we handle our insurance is we're not a direct writer like you might have with, say, Allstate. You go to Allstate, they sell you an Allstate product. We're a broker. So what we do is you give us your information. We have a little short phone call, a little short meeting, about 10 minutes, just gather some information. And we go out to every single insurance carrier in the state of Florida, your Progressive, your Allstate, and then other larger companies, Liberty, AIG, a couple of different other companies. And we get quotes from every single company. And then we put together a proposal on what we feel are the best prices, the best quotes with the most quality A-rated companies for you. And what we actually do is we bid these companies up against each other. So not only do we get their initial prices, but then we bid them up and try to drive the price down, try to increase coverages so that we do all the negotiations on your behalf. The final product to you is the best product for your business or association.
Now, is that a mistake? I mean, again, I want to come at this from being a guy who's maybe not educated in this like I should be, but I feel like a lot of boards may not be as well. Is it better to go through a Brown & Brown or to just call the insurance carrier directly? What are the advantages to going through a company like a Brown and Brown compared to me just calling up a State Farm and saying, "Hey, listen, I want you to cover my association"?
So when it comes to, if you have a small business, you might be able to call State Farm directly because they do what they call BOP policies, business owners policies, and
Mhm.
they're very just generalistic policies for smaller businesses. But once you start getting and you start paying more, about $10,000, $20,000 for your insurance, you start having higher payrolls and start getting more assets, then you can't even go directly to the carrier. These smaller insurance carriers won't even be able to handle you. You have to go to a broker, somebody who's specialized in insurance, somebody that knows your exposures that you might not even see, and can basically develop programs and give you different coverages based on your exposures. So once your business starts getting a little bit bigger and you start, rolling in the money, start hiring more people. And normally what we see is if you're like a contractor, you have more than 5, 6, 7 people, that's when you really need to engage in a broker to handle your insurance, because we have to go out there. We know the insurance companies and we have to basically put together programs, and it has to be professionally done because the insurance carrier doesn't want somebody who's not qualified in insurance to put together an insurance package for them. If you try putting together an insurance package on yourself, it's not going to work out well. And, there'll be, come claim time, there's always going to be an issue. So you're going to need somebody, you're going to need a broker to put that together for you.
Now, when there's a problem that happens, a hurricane hits, a flood that happens within your HOA, is it the broker that the individual is calling, or is it going to be the carrier? Where do you step in to help them after the fact?
So when it comes to a hurricane, the most
Yeah.
common misconception is, let's say your roof gets blown off, or even if you have just a small flood that comes in your building. Normally what we see is our insurance try to call the insurance agent first, but that's not what you want to do. You always want to mitigate the damage. You always want to call either a restoration company to repair the damages. You want to call the fire department. You want to call the police if anything has happened. And then we're the person that you call after, because
Mhm.
you want to make sure that you're mitigating any further damage. You want to make sure that nobody's getting harmed. You want to make sure that you're getting rid of any potential mold that can come. So you always call the agent. Now, we do recommend that if after hurricane, as you know, sometimes we don't have power, your agent might not have power, the agent's office might not have power. And if that's the case, you always want to make sure that you have a physical along with an electronic version of your policies, because there you
Good
can
point.
place a call in with your insurance carrier directly if you can't get a hold of your agent. So all your policies will say, in the event of a claim, you either call your agent or call this number directly. So you always want to make sure that you have it, and hopefully you're storing the information in a waterproof type of device, waterproof
Point.
type of bag, because after a hurricane, you never know what's going to happen. Everything could be floating in your house. You want to make sure you get a hold of those documents so that you can put in not only a claim to your insurance agent if you get a hold of them, but to the carrier directly and any mitigation company.
Absolutely. I see that a lot of homeowners associations, excuse me, don't do that. They don't mitigate the problem to begin with. Back when I was working in the HOA world, it's important that you do take action, that you don't sit around and just wait for things to happen, especially after a hurricane. People are busy. I mean, insurance companies are going to have adjusters out there. They're going to do everything that they can, but you've got to also do your part in the process to make sure that honestly you take care of your property, but also that you don't leave yourself open to the insurance carrier saying you didn't do your job and try not to cover the loss. Would that be correct?
Exactly. That's exactly
Huh?
correct. Because what happens is like with an incident, you run into somebody, a little bender, and you don't want to move your car on the road. You want the police, you want the adjusters to come and everybody to take pictures, but that's not the case. You always want to get your car out of the road. You can take your picture and then get the car out of the road. Same thing with your home or your business. You know, you don't have to wait for an adjuster to come out and take pictures to prove that the loss has happened. You can take your own pictures, but you want to mitigate that loss as quick as possible. In fact, most insurance companies will pay for mitigating expenses. So if
Hmm.
you have to take all of your electronics, everything out of your building, if you're after a hurricane, if your windows get blown out or the roof comes up, they'll mostly pay for a storage unit to put all your electronics and valuables in. They pay for mitigating expenses, and sometimes they'll even pay for people to come and take everything away before a storm comes. So take all of your equipment that you have outside, your patio furniture, tables, anything like that. Insurance companies are always on your side, because the more that you prepare for a storm, the less that they're going to have to pay out in terms of damages. So they're always on your side to help pay for what they call pre-mitigated expenses.
Love that. Talking about pre-mitigation, I want to talk about this because I think it's important. And we're right now in the winter time, John. So not a lot of big storms here in Florida. Although if you're in other parts of the country, you could have some big storms right now. Now, is it important to be able to document your property before the storm hits? I do, like for instance, getting out there, whether it be with you or the carrier, how would they go about doing that? Just pictures themselves? Tell me about the importance of documentation.
Yeah, so if you're a small business, you're going to want to document as much as you can. We have iPhones, which are great. So you can take pictures of everything that you feel is of importance. Now, once you start getting into larger businesses and let's say condo associations, what they
Yes.
have is they require an appraisal every 3 years. So this is basically the documentation on your behalf. You have a licensed appraiser come out, take pictures of your whole entire property, put together a full report on the replacement cost of your roof, the replacement cost of the building, per
Mhm.
square footage, and pictures that go along with it. So you don't have to worry about that if you are a condominium association, unless you're doing an addition to your condo,
Mm.
and you don't have that specifically put in your policy. Like let's say you build a tiki hut out back or something like that, mid-year. Every year before your insurance renewal, you always want to meet with your agent and tell them anything that you've done to the association, whether you've updated the roofs, you put in all impact windows, because agents will try to get you your credits as much as possible. All this stuff helps in upgrading your plumbing, upgrading your electrical. And like I said, if you've added any property, so added tiki huts, security cameras, anything like that, you want to make sure all of that's insured. On a smaller business side, yes, you want to take as many pictures as you can. Now, insurance companies, they're normally, hopefully, on your side when it comes to
Mhm.
a claim, and that's why the insurance fraud laws, the implications are so high if you commit insurance fraud. You don't want to go to jail or anything like that. So they normally take your word for it. If say you got a new screen TV, just right before the hurricane came and
Right.
damaged it. So
One of the problems I used to see with HOAs, and you've probably been to a number of meetings, John, is they get so caught up in I don't know, they meet once a quarter or they meet once a month or they're meeting 12 times a year. They're trying to deal with their AR issues. They're trying to deal with playground issues. They're trying to talk about reserves. They sometimes, in my opinion, until it's too late, they put some of this stuff to the back burner. The stuff like being prepared for the hurricane, making sure that you have talked to someone like you at Brown and Brown and gotten what they need in coverage, talked about being prepared. And I think it's unfortunate that these HOAs and condos push this stuff back because it's essential, man. Because when it hits,
mhm.
you're going to need someone like you on their side to be able to advise and to be in their corner.
Yes, exactly. You want to get with your agent and you want to be
Yeah.
well aware of what your exposures are. And some associations have more risk tolerance than other associations. You want to
Mhm.
know, hey, what's my deductible for hurricanes? What's my deductible for fire? What's my deductible for flood? You want to know each part of your policy and where your exposures lie. And if you want to transfer some of that risk, insurance is basically a transfer of risk. So you wanted to say, hey, how much money do we have in the bank? What's our exposure? What a lot of associations don't know is that on the homeowner's policy, which is the HO6 policy, your unit owner's policy, that they have something called loss assessment coverage. And this coverage will pay out at least $2,000 after a hurricane if the association has to special assess for a large deductible or damage that didn't hit the deductible. So if you're a homeowner, you have, let's say, 100 units,
Mhm.
then you've got $2,000 times the 100 units for the homeowner's coverage. That'll pay out for these loss assessments. So a lot of associations are saying, how am I going to pay for this massive deductible? Because the deductibles for hurricane insurance in Florida are either 2%, 3%, or 5% of the total replacement cost of the association, which is
Yeah.
massive. And
Huge.
normally if the roof comes off, you're going to be hitting this deductible. So how are you going to pay as an association? How are you going to get this money out of nowhere, out of your unit owners who may not be there because your association is condemned? So having your homeowners in your association all have homeowners insurance is going to give you at least $2,000 per unit, which is great. And if you're a higher value association, you can increase that easily two, three, five, $10,000 per unit owner. And if your special assessment coverage comes from that loss assessment, then you might not have to have any money out of pocket. Now, if you don't have all your unit owners have homeowners insurance, unfortunately, this happens. What we recommend is, either putting money to the side in your operating or reserves, if you can put a little
Sure.
money there, or just getting a line of credit from your bank. You always have to think, how am I going to pay for my deductible? after a large catastrophe. You have to, that's one of the most important things that a lot of associations don't think of.
So let me kind of break that down for maybe the layman out there, okay? Because I'm somewhat familiar with the world. So correct me if I'm wrong. Jump in anywhere here, John, okay?
Mm-hmm.
You got an HO6 policy, which is going to be for the individual homeowner, correct?
Mm-hmm.
So
Yes.
what these associations, I'm gonna tell you, if you're a homeowners association, and unfortunately, there's probably a lot of them out there right now where you may have been struggling to bring in income in the past 18 months due to COVID. What we found back when I was doing collections is that oftentimes when people run on financial hardships, the assessment is what they'll forego first. Does that make sense? You know, they'll do other things before, you know, they'll before they pay their assessment. And so if you have that issue right now where you're wondering, okay, we're having trouble meeting our requirements, how are we going to pay for something that's a large loss catastrophe? Because how are we going to handle that? This right here is a great solution to go to the homeowners, make sure that they are covered so that if that does happen, you can get that money from the insurance company based on those HO6 policies, right? Is that right, John?
That's correct. And the great thing about it is, you know, you've got a lot smaller deductibles for your home, for your homeowners policies. You know, you could have maybe $250, $500, and that way, you know, they could pay out for the special assessment of $5,000, $10,000. And that way, nobody's really in any financial hardship after a hurricane, because that's what we've seen a lot of associations where they could be paying, you know, $2, $3 million after a hurricane. So this helps pay for that deductible.
And that's great because there's an association that would need to levy a special assessment after a hurricane would be one that would be in financial hardship or would maybe be a little bit less. You know, they don't have as much money in the reserves, right?
Mm-hmm.
So what I would say is this,
correct.
that for those of you who are unaware what a special assessment is, what happens sometimes is there are things that come up within an association that are unexpected, or there's bad financial management within an association, and they have to actually give a special assessment over to the homeowners. And that's in addition to the monthly fee they pay to the HOA or condo association. So it may say, hey, listen, we're going to special assess you guys $600 this year. And then each person within that condo association is required to pay an additional $600. What they do is they take that to a vote, and that money goes towards a special project of some kind, or if there was a hurricane or catastrophe, to take care of that. What you want to do in your HOA is you want to make sure that you're fiscally responsible enough to where those things are not necessary. But in this time for COVID, I think John brings up a great solution to some of those out there that might have a financial hardship, is ensuring that your homeowners are individually covered. So when that catastrophe hits, you've got the ability to be able to cover those large loss deductibles. Do I have that right, John?
Yes, you got that completely right. And a lot of associations, they or homeowners, you know, if you're from a different country or, you know, in Canada or even a different state, a lot of times, you know, co-ops can be completely different where you may not need to have insurance. Or if you used to live in an apartment and you think condo is basically the same thing because you're renting, you need to have your own homeowner's policy. If you're renting out a unit to a tenant, you need to have your own homeowner's policy, and your tenant needs to have their own policy. So you always want to make sure that you have a homeowner's policy. And us at Brown & Brown, what we actually do is we put on educational seminars for all of our condominium associations where we go through the importance of having a homeowner's policy, educating the unit owners on why they need to have it, some extra coverages that can come from it. You know, a lot of people don't know that if you're living at home, you have a homeowner's policy, your son goes off to college, he gets his laptop stolen, something like that could be covered under your homeowner's policy, you know, even though they're away living somewhere else. So there's a lot of little tricks, and, you know, they're actually called more lifestyle policies now. They've been a lot broader in coverage, and, you know, we go into why you need an umbrella, and umbrellas can have some drop down coverages. So it's just it's something that we recommend all of our unit owners have as a homeowner's policy, and they're not too expensive.
No, they're really not. I mean, I've gotten mine, I think, through, I want to say Geico. I got it for back when I rented, and it was not that much per month. I mean, it was not hundreds of dollars per month. I know that. So, John, tell me about your life after a hurricane hits. What are you doing those next few days, and what are you doing also to prepare as maybe you see a hurricane in the Gulf that's coming our way?
Okay, so when we have a hurricane coming in, we'll start there. We see a hurricane coming. What we want to make sure that we do is speak to all of our clients, let them know what their deductibles are, what their coverages are, and maybe something that they're missing. a huge pitfall in a lot of condo associations or even small businesses, large businesses, is just because they have hurricane insurance, they may not have flood insurance. Almost all insurance companies who
So
insure for
true.
hurricane will not insure for flood coverage. You need to get your flood coverage normally through the National Flood Insurance Program. In Florida, that's normally the cheapest route to go. It's pretty cheap. And a lot of people say, oh, I don't need to get flood insurance. I'm not in a flood zone. Well, you see what happened in Hurricane Harvey in Texas, and it's happened all over here in Florida as well, where you're in an X zone. And I've seen associations in an X zone that's on the intercoastal. So some of it doesn't even make sense at all. Why they would be in an X zone, which is what they say you get one flood every 100 years. Well, what we recommend is purchasing flood insurance at any point, anywhere you are in Florida. Please have flood insurance. If you're in an X zone, then it's probably even going to be cheaper, which is great. So you've got that coverage, because after a hurricane, a lot of associations experience floods, windstorm damage, and the hurricanes have these large deductibles, like I've said. But these flood insurance, the highest deductible an association will have is $25,000, but most associations just carry $1,200 or $2,000 deductible, which is extremely low for your whole entire association to flood. So we always recommend having flood insurance. So that's one of the pitfalls that we call. We love to say, hey, make sure you have this flood insurance. And then after a hurricane, the hurricane comes through, hits, a lot of damage is done. What Brown & Brown does is we actually put together a whole claims division. So we have, I think we're about 1,000 employees now here right in Florida. And we put many of these employees all basically to handle claims. We set up, if our Miami office has their windows blow out, and they come to the Fort Lauderdale office and vice versa. And we set up large claims offices where we're basically taking phone calls all day, putting together claims, sending it into the carriers. And then once the damage has calmed down and we can get out there, we come out and see you, put together all of the, come out with the adjuster, put together all the reports, everything needed to put in your claim and make sure that it gets paid on a timely basis.
And that's the Brown & Brown difference right there. Because you guys have the manpower to be able to be there for your associations. I'm not saying that they're the smaller brokers out there can't do that, but what you guys are able to offer is that personalized service, and you have the manpower to be able to say, okay, we're going to be able to answer your phones. We're going to be able to answer your questions. We're going to have knowledgeable individuals in the field ready to assist you through this process, which is what you're going to want when that hurricane comes. You can go out and work with somebody cheaper. You can do that. But I'm telling you right now, HOAs and condo association, my board members out there, work with somebody who can give you the manpower and the attention you're going to need when that catastrophe hits. And that's going to be Brown & Brown, I assure you.
Yes, that's exactly it. And in fact, after a claim, we actually have our own in-house claims department. So, going through, they almost act as a public adjuster for you. So they will fight for you. You are our clients. So if we don't agree with the insurance company, you don't agree with what the insurance company has come out, we have our own in-house claims department that will fight for you, basically acting as a public adjuster, try to get you the most amount of possible cash and get it done as quick as possible. And if for some reason we need an extra push, to bring the carrier to court, you are our clients. So we'll help fight with you, and we can help bring in a public adjuster if needed to help fight the insurance companies. Because most of the carriers we represent, we've had great rapport with. Everything's been great after claims, but occasionally, something you might not agree with, and we're here to fight for you guys against the insurance company. Even though we sell their products, you're always our clients.
I think it's so great, man. You guys, and I got the chance to work with you guys through an organization called CAI down here in Community Association Institute in the Orlando area when I was involved with homeowner and condominium associations. And I got to see firsthand the kind of care and knowledge that Brown & Brown has. And I really want to focus on the knowledge because I got to listen to some presentations from Brown & Brown, talking to associations. I was at board meetings where y'all were present. Can you talk about the ongoing training that you guys go through? And just, you're an expert in the field, John, but that doesn't happen overnight. How do you get to be where you're at? And how does Brown & Brown stay on top of the game when it comes to what they know in the industry?
Yeah, so when it comes to that, basically what Brown & Brown has instituted is something we call Brown & Brown University, where basically it's getting your master's degree in insurance. But it's not a master's degree that you would get from a college, which is basically just, talks about all different types of insurance. Ours is very intricate in what we do, intricate in South Florida rates, hurricane insurance. It's basically university put together for Florida Brown and Brown agents and the exposures that we have here. So it's a great tool, great knowledge. Obviously we have our continuing education, but we also put on education for boards and property managers. I mean, I'm doing at least 1 or 2 a week with our boards and property managers or management companies on basically what's going on with the legislation and insurance right now, what's going on with different changes, what are the carriers doing, how's the market looking, are rates going down or up, and what are some of the new products that you can purchase to help transfer your risk away from your insurance or your association or small business.
And this is something that Brown & does. I mean, you guys probably do it better than anybody else in the industry, that ongoing education. You're not just there when the catastrophe happens, but you're helping the homeowners through the process leading up to it to make sure that they are taken care of. This is something that that roofing contractors could learn a lot from. In our industry or contractors in general, I see them talking about wanting to land, big commercial deals. Every contractor wants to work one of those big catastrophes in a condo association because there's a lot of money. My question to you contractors is, what are you doing before the catastrophe to build that relationship within the community? Brown & Brown is out there teaching, doing seminars. I've seen them literally give an hour presentation at a homeowner or condo association explaining their policy, just going through it with the homeowners so that everybody's aware of what's going on. If you're a contractor, ask yourself in your community, when's the last time you put on a seminar? When's the last time you had some people out there to teach them about roofing or to teach them about what you can do after a catastrophe? Companies like Brown & Brown are on top of their game because they're doing stuff before everybody else is. Those smaller individuals out there who are just struggling to get by, they're only going to help somebody, hey, when they absolutely have to. Guys like John are professionals in the industry, and it pays off in the end. Yeah, you may take time to do that education. It may take time to get that master's degree in insurance that Brown & Brown offers, quote unquote, but that's where it pays off for you when those catastrophes hit. When the people need you the most, they want to have somebody in their corner that they can rely on. So, John, I want to kind of dive into a little bit about that. Is there anything else about Brown & Brown that sets you apart from the competition? I know you have the ongoing education. You've got experience in the industry. You're there with your homeowners. Is there anything else that jumps out to you that really separates you guys?
Yeah, I mean, so we take a lot of a different approach to a lot of the insurance products that are out there. Like a lot of people say, no, we've got great rates, but some rates are set by the state. So like flood rates, they're set by the National Flood Insurance Program. Everybody gets the same rates. So what we do is we actually have engaged with a contractor. It's completely separate than us. It's basically a flood zone surveyor, and we go out and we survey all of our clients and maybe all of our prospects, our potential clients. So the rates are going to be the same for the flood insurance, but if we can find additional credits or maybe something wrong on the elevation certificate, then we'll go ahead and put together a new elevation certificate for you and get you lower rates because we're applying credits. Same way with the workers' comp. Workers' comp rates are set. Everything's the same from agent to agent. And so what we do is we actually try to find, there's different credits that you can get. So we have the safety credit, we have the drug-free credit, but we also make sure that you are applying your workers' comp class codes correctly. So we want to make sure that you're getting all of the best credits that you can get and that everything's correct in your workers' comp policy if we can help save you money. We also have great relationships with carriers and some dividend plans for many of our contractors and condominium associations. So because of our volume of business, largest provider of insurance for middle market industry. So our volume of business can help drive higher dividends and lower rates for you on many of our products. And one thing, that you want to think of as a condominium association, when I was speaking about workers' comp, is do we let on these mom and pop, plumbers that don't have workers' comp insurance? It could be a huge exposure for the association if they don't have workers' comp insurance. So what we see is a lot of our associations do require that all contractors have workers' comp. And if they don't, it's up to the association to decide if they want to allow on a contractor that doesn't have workers' comp. But if that's the case, you want to make sure that that contractor has workers' comp exemption filed with the state. If they have the workers' comp exemption filed, that's great as long as your association approves it. And also going back on the contractor side, if you're doing work for an association, homeowners, businesses, and you don't have workers' comp insurance, you want to make sure that you have a workers' comp exemption filed with the state. Because all the associations I know will not allow you on the premise if you don't have that exemption filed with the state, if you don't purchase workers' comp insurance.
So one of the things I wanted to, if associations need to be very careful about who they bring on to do the work in their property. The reason is because I have seen some big time roofing contractors, people that you would think are doing $5-10 million a year, that don't have the right type of coverage that you're going to want to step foot on your property. Always ask the question about coverage. Don't be afraid if you're a homeowners association, start asking the questions. Just because somebody's got a great website or just because they've done work somewhere else doesn't mean that you can just trust them. Verify the contractors that are coming onto your property, because if you do, God forbid something is to happen out there, you don't want to be the one left carrying the bag as an association.
Yeah, that's completely right. I mean, you want to make sure that they're licensed, that they're insured. You want to, if anything, if it's a large project, they're doing a roof or, they're doing a sprinkler system or something like that. If you have questions about their policies, ask them for a copy of their general liability policy. Ask them for copies of their policies. You can send it over to your agent and they can review it for any exclusions. We had one association who ended up being a client of mine, but the contractor had a condominium exclusion in their policy. And they ended up hitting a sprinkler pipe in the condominium, caused over $700,000 worth of damage. Their insurance policy wouldn't pay. It was a smaller contractor. They didn't have many assets. So the association's insurance policy had to take on the $700,000 claim and had that on their claims history for the next 5 years going forward. And therefore, their rates increased. They didn't have many carriers. They didn't even wanted to insure them. And so they had large deductibles. So that's something you always want to make sure. If you're doing a large job, have your insurance agent review some of the contracts for some of these contractors, the contracts and the insurance policies, because you don't want to make sure that you have any of these glaring exclusions.
You don't. I'm going to kind of throw a weird stat out to you right now, John. I work with an organization called Construction Angels. Okay, and this group, what they do is they work with families that somebody dies unexpectedly on a job site. Someone falls off a roof. Something terrible happens on a job site, right? And they work and they help these families out. I was shocked to learn the number of people that die on average each and every day on a job site in America. And that average is 4.5 individuals a day die on a job site somewhere in the United States.
Wow.
Now, the reason I mention that is if you're an association and you don't think it can happen to you, you don't think somebody can fall off a roof, you don't think that $700,000 loss that John just mentioned could happen. Imagine if there's a wrongful death. Imagine if there's something catastrophic that happens out there. Do yourself a favor. Talk to the contractors that are trying to come out there and work on your property. Find out what they're about. Look at their coverages. Ensure that you're working with quality individuals, because if something happens, you're going to want to make sure that you're covered. Am I saying that there's going to be a death out there? Heck no. I mean, I'm using an extreme example here. I understand that. But you just want to make sure that you cover your own butt. Now, along those same lines, John, I know there are going to be some people who listen to this. They're sitting on their board and they're thinking to themselves, I got no idea what John is talking about. No one's ever explained any of this stuff to me. We need to get our butt in gear before the next hurricane hits. Can they make a switch over to Brown and Brown? How does that process work if they're like, we need to get over here with John because that's what we're missing out on?
Yeah, it's actually pretty simple. So what we do is anytime I meet with a new prospect, somebody that we have interest in doing business with, what we do is we do a full entire audit of your insurance policy. So we don't just take over and say, hey, we're going to save you 5%. We do an audit of your insurance policy. So I put together a full proposal on each policy stating, hey, you have this exclusion. Some exclusions they're okay with and they want. But most exclusions, we say, hey, here's an exclusion that you have. Here's why you don't want it. And here's how we can get rid of it. And if there is a cost associated, there's not always a cost, but if there is a cost, we let you know what the cost is, and basically put together a whole entire insurance program to make sure that you're fully aware of your exposures and that, the cost associated. And we always do, since we're a publicly traded company, BRO and the public New York Stock Exchange.
Mhm.
We can only use carriers that have the highest financial stability and ratings. We go by AM Best A-rated companies, because there are carriers out there that are B, C rated companies. And in fact, we actually lose clients each and every year to these B and C rated companies. And what happens is after a hurricane comes through, they don't have enough money to pay for their claims. They end up not paying out for any roofs that got blown off, or they're just extremely slow. They take over a year to pay for these claims. Roofers aren't getting paid.
Yep.
Associations are under a lot of stress, and they end up coming back to us and saying, "Hey, I'm sorry we left you for a 2% savings last year, but it wasn't worth it." And we end up getting those clients back after each and every hurricane.
It's great, man. So they say it's as simple as giving you a call and saying, "Hey, listen, I don't think I'm getting everything I deserve right now. I don't think that I don't know a lot of the answers to the questions that were asked or on the podcast, whatever it might be." It's just giving you a call and getting you to come out there and start talking to them, right?
Yeah, that's really it. It's very,
That's it, man.
very plain and simple. I mean, we make it very easy for you. We put everything in layman's terms. Our audits are very easy to understand. And basically, at the end of the day, insurance agents are educators. We have to be out there to teach you, what's going on. As a board member, you assume a lot of responsibility by being on the board. If something's not paid right, something's not done right, there actually is an exclusion on directors and officers insurance policies. That's the policy that covers you as a board member or covers your property manager. But there is an exclusion called failed to procure insurance. So
Hmm.
if there's a policy that you don't put in, you say it's too expensive, or you don't want to pay for it, or you just don't even want to deal with anything about it, and you don't put that policy in, you and your assets could be liable for a lawsuit from the association for failure to procuring insurance.
Wow, I know I would have no idea about something like that. And I think that too oftentimes what I saw when I was in that world is um, if you're a homeowners association, don't just rely on your property management company. Um, I see
Mhm.
HOAs and they just say, well, I'm just going to listen to what, the property manager says. That's a very dangerous game to play with your insurance. Let me tell you why. There are portfolio managers and there are property managers in the HOA world, meaning you could have somebody that maybe has 12 other associations that they're working with. At no fault of their own, they could overlook something on your policy. They may not be insurance experts. They may be overworked, or they may just not have experience in the industry. They could have just been trained in that world. So they don't know what to look for. Don't rely strictly on your property manager and your property management company to be able to provide you with the answers that you need. You've got to go and you've got to seek out that information from professionals like John to get you the answers that you need to cover yourself. Because I assure you, ignorance is not going to be something that's going to pay for whatever damages are out there. You've got to take the steps to make it happen for you. And I think that's a mistake that a lot of homeowners associations make, is that they're relying so much on that property manager who's there one time a month. They're working 6 hours a month on their property because that's all they got the money for. And they're relying on this person to be the professional. There are a number of great management companies, amazing property managers out there, but don't take that risk if you are a board. You need to contact Brown and Brown so that you can get out in front of these situations and have an expert in the room.
Yes, and that's laid out perfectly. Your property manager, they're there to review the certificates of insurance from the contractors. They want to make sure that they have the coverages in place and all of that. So one of the things that we implement in all of our associations is called a workers' comp, if any, policy. And now you
Mhm.
might ask, hey, we have our management third party, security third party. Why would we need a workers' comp policy? We don't have any employees. What this policy does is, even though your manager checks the certificates of insurance, what if they didn't pay their bill in time and they don't have insurance and it canceled and they're giving you an old certificate? What if the certificate is fraudulent? That doesn't happen too often, but it could. Or what if they, have some type of exclusion or something where their workers' comp policy does not pay? A workers' comp, if any policy, very cheap policy, $600 per year, will cover you for any workers' comp exposure that your association might become liable to because your contractor didn't pay. Or let's say you're a board member. All of our workers' comp policies have a volunteer endorsement. So let's say a board member's changing a light bulb, falls down and gets hurt. Workers' comp policy will pay out for that. So you want to make sure that if you're an association, that you have a workers' comp, if any, policy. It's the cheapest policy you can get for the most amount of coverage. Because if one of these contractors comes on, ends up falling off a ladder, cracks their neck, dies, you could have a huge lawsuit on your hand, and this
Hmm.
policy would pay out for their benefits, any type of lawsuit, anything that might happen.
That's such great advice right there, man. I mean, because you're right. There are not many people who know about that, and that's because they don't have someone like you in their corner. I want to end on this. Could you tell people out there how they can get a hold of you? Because my question would be, if somebody's watching this out in Indiana and they're thinking, okay, you're based in Florida, can they still reach out to you, John? How would that process work of getting started with someone like yourself?
Yeah, so the process is very easy. And what's great is too, the good thing that came out of the coronavirus is that we've got Zoom now. We can
Mhm.
meet virtually. Obviously, we've got email. We can do everything electronically. We've got DocuSign and all of that. So you want to just give me a call. I'm always available on my cell phone. I give all my clients my cell phone because you never know when you're going to need to call me. My number is 561-289-6790. And that's going to be the best way to get a hold of me. So once again, 561-289-6790. And one last word of advice that I wanted to kind of drop on everybody.
Please.
In this time of coronavirus, everyone's wondering what's going on with insurance. How has coronavirus affected insurance? And what we've seen is most policies have a communicable disease exclusion, which
Hmm.
basically means that coronavirus is part of the communicable diseases, and therefore any claim due to communicable disease is excluded. So for condominium associations, we actually have what is called a gap legal policy. And what this policy does is it defends the association with a $0 deductible for any claims that are excluded on a insurance policy, and we're talking about liability claims. So any lawsuits that the association might get. So let's say somebody gets coronavirus at the pool because somebody wasn't wearing a mask. They sue the association. This policy would pay to defend the association. They're very cheap. They're about $2 per door. It's a new policy that we put it in place because of the coronavirus, because it's very difficult to get communicable disease coverage. And it's going to be
Mhm.
even harder now because of what's going on with the coronavirus. If you're a business, if you're a restaurant, you're trying to get business income insurance, you're trying to get coverage because your restaurant's been closed for 5 or 6 months, your policy may not pay because of communicable disease exclusion. So there are policies now coming out that will have coverage for communicable diseases. It's whether
Wow.
or not you want to pay for it. They can now be more expensive because of the coronavirus. But that's something you need to think about. What if we have another pandemic? What's going to happen? Can your business survive it? We're seeing a lot of small businesses close. We're seeing a lot of condo associations going into debt because their unit owners can't pay their maintenance payments. Think about pandemics now in the future. That's the one thing that's come out of this that, we need to really think about. How is your association or small business going to be able to go forward?
I think that's such great advice because no one's really thinking about the insurance. They're not thinking about as much as they should. I shouldn't say no one is thinking about it, but small businesses and associations have got to deal
Hmm.
with the new reality that we have. It's not just going to be normal workers' comp. You could be dealing with something with COVID or God knows who knows what's around the corner in 2021. But now is the time to get prepared for that so you don't open your liabilities to those contagious diseases. Yep.
Yep, that's exactly it. And that's all the reason, like we were ending on is why you want to call your insurance agent, why you want to have a sit down with them, know your broker, know what they're about, and make sure, a lot of people, if you're a board member and you're taking over the insurance policies from your prior board, get to know the policies, get to know your agent, know what you're covered for, know what you're not covered for. The prior board may not have made a great decision on their behalf. They might have canceled some coverages like flood insurance that you could have had. So know your policies, know what your risks are, because like I said, failure to procure insurance is an exclusion on the directors and officers policy. So know your agent, and we're always here to help out. I give you a free consultation, free audit on your policies, and let you know, what we think. And sometimes if your policies are perfectly put in place, we'll just give you a thumbs up. But what's great about that is now you know that you've had a second look at it. You've had somebody else been able to go through and make sure that you didn't have any exclusions or any gaps of your coverage.
Love it, man. It's solid information for association and small businesses alike. I'm going to end on that note, folks. I will put John's contact information below the video. And if I add any clips, of course, I'll give you John's contact information as well. Please give him a call over at Brown & Brown. Don't wait for a catastrophe to happen. Make sure you've got the coverages that you need. Final note I want to say about you, John, is this. He comes highly recommended from one of the major investors that we have over at My Claims Care. This is not a guy who I know we're just meeting here on the podcast, but his experience and record speak for themselves. Personally, I vouch for him, and so does our company. So please, if you need a professional in your corner, this is the man that you want to call. I really appreciate your time today, John. Thank you.
Yes, thanks for having me.
All right, man. Thanks a lot. Have a great day, brother.